everyone, welcome back to the Daily Dive. Joining us on the show today is Gareth Soloway from InTheMoneyStocks.com. Gareth, welcome to the dive.
Hey, thank you so much for having me.
So we are a small cap platform. What are your thoughts for small cap stocks in 2021?
I think as long as you see the market continue to be in this float mode where the stimulus is always there and just continuing to flow, small caps are going to remain so hot. Amazing moves right now in some of these small caps, and it should continue as long as the punch bowl stays open for business.
So we researched you a bit and we realized you're short Tesla. Are you still short? And what do you think drives Tesla's valuation here?
So listen, I am still short Tesla. It's not fun being short right now, but the long-term thesis that I have continues to be in play. And again, the valuation is insane here. There's no other way to describe it, but just looking at the fundamentals of what's going on, not only with the business with Tesla, but with other competitors. And I was just running through a list of competitors, right? It's amazing here. I've got GM, Ford, Apple's getting into the business, Fisker, Faraday, Lucid, Honda, Toyota, Nissan, Hyundai, Rivian, Byton, BMW, Chevy, Volkswagen, Nikola, NIO, XPeng, Li Auto, Workhorse, and I'm probably missing about 10 other competitors coming into the EV sector. So that right there makes me concerned about the long-term valuation of Tesla here. And then if you throw into the mix that they're actually losing market share in certain areas, like in Europe and parts of Europe, that's also concerning. Now, a lot of people will say that, oh, well, they have their power business, or they're going to charge for the autopilot. And I would say that's great. But the problem is all these other companies are going to look to do the same. Or if all the other companies offer it for free, then Tesla is going to be forced to offer it for free. So, even if they sell, and the estimates right now that they're going to sell 5 million vehicles by 2030, that's only less than two times what GM currently sells per year. And it's hard to reach a valuation that's basically around Facebook in terms of where they're currently priced. So I remain short. I hope to hold it all the way till about $300 a share at this point.
Okay, so let's move our focus to the stimulus. Do you think a Biden stimulus package is already baked into the market?
I do think partially. So I think that he already announced the $1.9 trillion in stimulus. My guess is that won't fully be 1.9 when it passes Congress, probably 1.5 trillion. But then the big question mark is going to be the next stimulus round in terms of infrastructure and things like that. And I think that's what the market's kind of going to look forward to see, can that jumpstart the economy even more? But the kicker here is that, the more we stimulate the economy, the more inflation is going to bubble up. The more inflation bubbles up, the higher interest rates go. And then the question is if interest rates push up too much, does the Fed lose control? And then, we know that the Fed forced interest rates down, which is what has created the market bubble currently in place. Does then the rising interest rate environment push the stock prices back down?
So what risks do you think there are that could create some pullback in the stock market?
That's a great question. So there are lots of risk. And this is why I'm a little concerned with the market at these valuation levels, is the market's only looking at stimulus. It's only looking at the vaccination process and trying to get us all back to kind of normal life. But we're not talking about when taxes are going to go up for the 1%, which, let's be honest, the market investments, if you look at dollars in the market, a huge percentage of those dollars are from that upper class. And with Biden talking about the long-term capital gains taxes going up, corporate taxes being raised a little bit, these are things that once the administration starts talking about them, they're going to affect stock prices. There's no doubt about it. So I think that those are big risks. I think the interest rates, if the interest rates on the 10-year climb over 1.5%, the market starts to get worried as well. And then you just have other issues, domestic terrorism, you have issues with China, issues with Russia, all these other issues out there that the market as of now is ignoring, but the question is for how long.
With apps like Robinhood, do you think that institutions are now trying front-running retail investors?
I do think this happens a little bit, and it's something that investors need to be aware of. So what really goes on here is everyone does free trading, right? You don't pay commissions anymore really for making a trade, which is great for the average investor. They save themselves $5 or $7 of what it used to be. But the problem is that if you use a market order in the market, the institution you're trading through, whether it's Robinhood or someone else, they're routing your order and trading against you. And so what you're doing is you're losing a few pennies, at upwards of 5 to 10 cents, even for your entry price. that actually ends up costing you probably about $5 anyways on the average trade. So just be aware that it's not all, I mean, free trading is not really free trading. There are ways that these institutions have to make money, and they're going to do it. And it comes at the expense of the average investor. There's no doubt about it. I would recommend use limit orders, and then you're guaranteed to get your fill at that price that you want. They can't mess around at that point.
So Gareth, do you care to share what stocks you were long and what's your reasoning behind?
Yes, absolutely. So I like biotech right now. Biotech's the one area, and we have seen biotechs like Gilead and Amgen starting to move up recently. But if you look at the fundamentals behind these valuations, a lot of them are trading cheaper than a lot of the big cap tech names with about the same growth. And I think there's a catch-up trade in biotech, big biotech right now that you could take advantage of. Gilead looks good still for further upside. Amgen looks good. Stocks like that for sure. There's a small cap ICPT that I like as well. That's a smaller stock. It's under $1 billion market cap, but it's also a biotech, has good revenues, is at the low end of the chart as well.
So last question here. What are your thoughts on gold for 2021?
I would say that you want to buy gold on pullback. So we're getting a pullback right now. As long as the Fed continues their easy money policy, as long as the printing of money goes on from the government, which shows no signs of abating, you got to think that gold will eventually continue to grind up. I would say by the end of this year, you're looking well north of the recent all-time highs above 2,000, maybe as high as 23 to 2,400 by year end.
Well, thank you so much for joining us on the show today, Gareth.
Hey, thank you so much for having me. It was a pleasure.
And for our viewers at home, don't forget to click that subscribe bell below. We'll see you next time on The Dive to talk all things small caps.